It's been 5 years since I moved to the UK. Yes, thank you for the congratulations. And the truth is, I have learned a lot from my mistakes, actually big and small. I've also learned from the mistakes of the numerous people that I've spoken to as a result of what we do here at the Wealthy Post. And most importantly, I have learned from just researching and looking out for answers myself. And each mistake, both mine and the ones from others, have taught me something valuable. And today I'm going to be sharing money lessons that have completely changed my financial life since I moved to the UK. And trust me, I wish someone actually told me these things when I first landed in Heathrow 5 years ago. Whether you've lived in the UK your whole life, or you're actually new, or you're even planning to maybe in the next month, next year, next 6 months, these lessons would actually be very useful. So let's dive in. Lesson number 1, start contributing to a pension from your first job. There is only one group of people that I would say this might not necessarily apply to, and that is you see yourself in the next, maybe you want to get on a job for maybe 2-3 years, maximum 5 years, and then you're going to start a business. Now you need to be very, very concrete about your plans. And I'm not saying wishful thinking here. There is a plan in place, and I've spoken to people like that. They just want to do a job for like 2 years, and then they already have that business that they want to go into. Now you don't need to contribute to a pension if that's the case, because your eggs are already in one basket, that business that you want to do, and you might actually need that startup fund for your business. So, but the 99% of us that don't have that plan, or you need a job, you don't know when you will start a business, whether it's going to be in 2 years or in 20 years time, right? Start contributing to a pension from the first job that you get. And anybody that talks to me and asks me what is your biggest mistake, this is one mistake that I actually made. When I got my first job in the UK, I opted out of the pension scheme. I told myself that I'm only here temporarily, just like I've mentioned. But here's the crazy part. That temporal decision, that wrong decision as I'll call it, actually cost me at that time £1,320. Where it gets interesting is in the future, when I would have accessed that money, right, is the pension, I can't access it immediately. That £1,320 would have actually grown to £26,000. Now that means that I actually lost not 1,300 but £26,000, and most of that is just free money. The truth is, your employer would offer you a pension if you are eligible, and most of us actually are eligible, and usually they would match your pension contribution with a minimum of 3%. That means that you contribute 5%, which is your minimum, and they would match with a minimum of 3%. Some employers are even very, very good that they would match up to a certain percent. So some employer would say 10%, some would say 7%. So if you could increase your 5% to 7-10, they would go with you all the way to 7 and 10%. That is a big deal. It's something that you shouldn't pass up. And if this is you, or you still want more information, I've spoken about this in previous videos, which I would link in the description. Check them out. If you want to do a U-turn, in those videos you'll find things like checklists, email templates to send to your HR, basically a step-by-step guide. The next lesson is actually to know your investments. Now, this is what nobody will tell you about your workplace pension, right? The moment you sign up, that's one part of the battle, and that's a good thing. But the problem is, most likely you would be put in the default fund, and most times those funds are rubbish. I didn't realize this after 1 year of investing in the pension fund. If you have a pension, you're an investor, and that means you need to know where your money is actually invested. Sometimes these default funds have high fees, and they give abysmal results, and all it will take you is 5 minutes. Log on to your pension portfolio and actually change this investment to a low-cost index funds. Fees are actually very important. Some of these funds would even be as low as 0.03%, and this could make a real difference. You can see on the screen what the difference in funds would mean for someone that's invested in a maybe 0.5% fund and someone that is invested in a fund that is 2%. See the difference. The third lesson is to actually learn and understand the jargon here in the UK. There is a lot. NI, pay, and these things will be thrown at you. People don't care that you just came and you don't understand it. You need to learn about what these acronyms mean, what it actually means to you. Because here's the truth. Ignorance here in the UK would cost you a lot of money. Things like penalties and fines. You would pay them just because you did not get the right information or you don't know. I even know of a friend that was fined £500 just because he didn't pay his estate fee on time. He's working, he has good money, but just forgot to make that payment. Ignorance is not an excuse. If you don't understand something, look it up immediately or drop a comment. If it's something financial, I would respond to your comment. You can also sign up to our newsletter so you can email me directly. The fourth lesson: automate your expense. In this day and age, don't do anything manual as much as possible. Automation is actually a game changer. It can help you avoid what I just spoke about: late payments, late fees, penalties, things like that. Most importantly, it also frees up your mental capacity to think about other things. Set up things like your council tax, your rent, your utilities, all of that. Also set up standing order on your savings and investment goals. These things are important. You need to automate your finances, and then you could focus on other things, other financial goals, without worrying about due dates. The fifth lesson is to actually leverage debt wisely. And the key word there is wisely. Debt is not for everybody. And specifically, I'm talking about credit cards, right? In the UK, credit cards come with things like rewards, like cashback, points. A lot of these credit offer these things, and you should take advantage of them. But if you don't pay off your balance at the end of the month, the interest would be brutal, and you don't want to be on that side. But here's how to use a credit card wisely. Number one, pay off your balance in full at the end of the month. This is non-negotiable. The mistake a lot of people make is the bank would actually tell you, oh, your payment this month is £20, is £30. But what they don't tell you is that that's the minimum payment that would not trigger an adverse credit report for you. And what that simply means is if you pay £20, your credit report will be good. But the remaining 1,500 and whatever it is, you're going to be paying interest on that from the very next day that statement is due. So you've paid the £20, you're fine. But what you owe just grew from 1.5 to 1.7 because you've been hit with a 70% interest rate. You don't need that. That's not how to build wealth here in the UK. The next thing that you need to do with your credit is to actually use it for your normal expense. Because you have a credit card that you have a balance of maybe £10,000 doesn't mean you just go out splurging. Thirdly, limit your utilization to 30%. And also I spoke about the rewards, right? Those rewards actually help you cut down on your normal expenses too. I remember using points, right, to reduce the cost of flights for a family trip, and that was so interesting. I was so happy about it. A flight that would cost the whole family £5,000, almost £5,000, because of the points and all of that, came down to £600. 600, and that's massive, right? But that is money that I would have paid for that trip, because the trip was important, if I have not been using a credit card for a number of years and I've racked up those points. If you're enjoying this video so far, please give us a like button. It actually tells YouTube that you are enjoying the video, and it helps us a lot. Let's go to the next lesson, and that is don't rush into buying a house. Yes, I know everyone in the UK is obsessed with buying a house, and a house is an asset in my own definition, right? Because it has value. Now, can that value be taken at the snap of your fingers? No, it's not as liquid as it is, but it has value. A house has value. But buying a house immediately is not for everyone. There are people that shouldn't buy a house, or even if you have to, it's not something you need to rush into. What I've learned is that rushing into buying a house could actually be a massive mistake. For example, if you're not planning to live in that area for at least 5, some would even say 10 years, buying that house might actually be a mistake, unless if you plan to flip it, which I've seen a lot of people do with great success, right? They buy a house, they live in it for 2 years, the value has gone up, and then they flip it. How successful that would be going forward, especially with the new interest rate climate, is still left to be debated. But people have made money with that kind of strategy. Another example is actually being house poor. There is something called being house poor, where you're paying over 50%, some people 60, 70% of your net income to your house. Things like mortgage, insurance, all of that, your utilities. Watch out for these costs. That's something that is really, really shocking. And even when you want to buy a house, there are other costs that are associated with buying a house that you need to also prepare for. Sometimes the truth is, renting is actually a smarter move until when you're ready. The 7th lesson is to upskill fast. In the UK job market, skills are like currency. The higher skills you have, it means that you can actually demand for a higher pay. And in most cases, many people don't even know that their company can actually pay for most of this learning. So upskill fast, but don't wait for your company to pay for that. Take your growth as your most important responsibility. I tell people that is one investment that you can make, that you're sure to get 20 times, 30 times, 100 times the return, because what you learn today can be carried on for as many years as possible. Now, the trick here is not just to do anything, right? Look for skills that are in demand in your industry, courses that you need to do. Don't just do anything. Your time is also important. Consider platforms like Coursera, LinkedIn Learning, even YouTube, to actually learn these things. And this is what many people actually forget, right? They forget the role of mentorship. Get mentors on board. Talk to people. The 8th lesson is to create your own money rules. Now, after 5 years, I have learned that clear money rules actually eliminate stress. Now, I'll share my top 3 money rules that have actually changed my financial life. Rule number 1 is to not touch my emergency fund unless it's actually an emergency, right? And that's very self-explanatory, but it's important for me because I'm that guy that can touch to buy something. Secondly, is to wait 48 hours before any purchase over £100. Now, I'm saying I understand that you're getting the flow here. I'm the spender in the family, right? And this rule have actually saved me thousands of pounds. The 3rd rule is actually to pay myself at least 15%, and that means that sending this money straight into my investment, either through a pension, through I make sure at least 15% of my income. And these are not just random rules. They are things that I've thought about for me, and they are guardrails to help me to be able to make the right decisions. And you need to craft your own rules. Like, don't make it so much. Maximum of 10 rules is what you actually need. And these rules doesn't have to be permanent. You can change them. The 9th lesson is to plan. The truth is, financial success doesn't happen by accident. For those that it happened by accident for, there are numerous stories. Just go and read about people that have won the lottery, how they lost that money as fast as they won it. Real success, building wealth, doesn't come by accident. You need to plan for that. If you're going to live in a house, would you just come one day and just start putting things together? No. You would create a plan first. You would plan for your equipment, plan for your resources, both human and material. You would plan all of that out before you actually start building the house. Not to talk of your finance, you need to plan towards your finances. Planning will help you set goals, whether it's paying off debt, saving for a holiday, building up for a house deposit. But most importantly, these plans, you need to set up systems, and that's what plans do. Plans will not just look at goals. It should also help you set up systems that would help you accomplish those goals, right? And the 10th lesson is to actually be your own CFO, Chief Financial Officer. Stop treating your finance like a side hobby, like a side gig, something that you do when you remember. You're actually the Chief Financial Officer of your life, and you need to approach your money right. It doesn't mean it takes your whole day, but you need to set up things and systems to make sure that your money is going in the right direction that you want it to go. And if you have a partner, you and your partner needs to do this together, not you doing it and your partner doesn't know what's going on. You need to do it together. So instead of checking your account only when you're worried about money, as the Chief Financial Officer, you'd have a weekly or every 2 weeks sessions, maybe not more than 30 minutes, where you look at your finance, you look at how you send, readjust your budget if you need to. 30 minutes is enough for all these things every week. At least I spend at least 30 minutes doing this every week. You create a budget, you update your budget, you check your spending. Have you overspent in this? Do I need to adjust? You also look at plan for upcoming expenses. These simple habits would actually transform your relationship with money. And the 11th lesson, final one and a bonus one, is that you're in a new country, but you have the same habits. So here is the truth bomb, right? Moving to the UK doesn't automatically fix your bad money habits. If you have them, you're coming into a country, it's a fresh start, but I've noticed you will just move the bad money habits that you had from wherever you're coming from into the new country. So simple example, if you're bad at saving at home and you come to the UK, if you don't watch that, you'll be bad at saving. It's as simple as that. So the solution isn't willpower or deluding yourself that you're in a new country and things will change or you will earn more. You just look for new things to actually spend your money on. It's to actually build a financial habit that would help you correct it. So one, you're aware of what the problem is, and secondly, you build system that will help you correct that defect. And one system that has helped me a lot is actually automating my finance. So things actually move from manual, from your hands, to actually happening automatically. Another is accountability. That's very powerful. And if you want me to be your accountability partner, there will be a form in the description, a simple form just to collect your details, and I'll reach out to you via email and we can work something out. If you found these tips useful and this lessons useful, please do hit the like button, subscribe to the channel for more videos like this. And remember, thriving financially in a new country is not about being perfect. It's far from it. It's about being intentional with every single money that comes into your hand, being a good steward of the money that comes into your hand. All right, see you.